Hello, everyone. Well, talking about the Facebook earnings when they come out. So, if you guys have some questions, we have some time to kill. Maybe you can start writing them in the chat, and I'll try to answer some of them while we wait for the earnings. But while we do that, I just want to set up the table a little bit with Facebook. Like, what can we actually expect from them? Well, the main thing that we're looking for right now is to see what kind of narrative they're going to give us for 2022. The reason I'm talking about that is that back in Q3, Facebook had a fairly average earnings report, right? So the numbers were okay, but they weren't like earth shattering or anything. And one of the things that they were complaining about was the supply chain issues. They were talking about the fact that since a lot of the companies have low inventories, well, they didn't need to advertise as much, right? And because of that, their revenues didn't like explode like some people would have liked them to. Facebook's very interesting because the company has basically dominated their core business, which is social media, right? So they have Facebook, they have Instagram, and other companies, and they basically dominate that market. So, like now, they need to have new avenues of growth, which is going to be the metaverse, but that's going to be years down the road. So the fact that they're kind of like depending on advertisement means that right now we have to look and see like what's the state of advertising, because yesterday we had PayPal that reported, and PayPal had that same narrative that Facebook did in Q3, saying that because of supply chain issues, because of the consumer weakening in the first part of this year, right, that's going to hamper their revenues. So is Facebook going to tell us exactly that same thing, and they're going to give us weak 2022 projections? Or the other narrative that we've heard from companies like Apple, that not only is the supply chain issue starting to really resolve themselves, but also they see a lot of demand for their products, right? So you have two very, very competing like narratives for 2022, and that's going to be very, very important for us for our investments, right? Because the thing is that like if it's just market forces with the rate hikes, in my opinion, the market can sustain that. We don't really like, it's not that big of an issue, right? So whether they do 3 or 4 hikes, most companies can actually like sustain that. They're not going bankrupt or anything. But what will be an issue is if the consumer is weak, like PayPal says that they are, right? So once again, at the same time, you had MasterCard, American Express, all said that they were doing very, very well, right? So you have two camps here that are forming, and now we have to see, well, what is Facebook actually going to say? Are they going to be in the camp of 2022 is going to be a bad year, or are they going to be in the camp of 2022 is going to be a pretty good year for the consumer? Personally, I kind of tend to be a little bit in the middle. Right? I think that Facebook is going to be more in a consolidation year rather than a like very strong growth year, because as I said earlier, right, with their main core business, they kind of reach all the consumers that they could possibly get on Facebook and Instagram. So now they need to really get that growth through the metaverse with the Oculus, right? So that's what we're going to be looking for is their projection for 2022 and what is going to be like their sentiment on the consumer and how that's going to actually translate in advertisement revenues. All right, so if we look at the earnings calendar, so for Meta platforms, Facebook, they expect 385 for EPS, and we expect 33.34 billion for revenues. Now, Facebook is seasonal, right? Like most companies, there's some parts of the year related to advertisement that are stronger than others. So Q4 is usually their strongest month of the year because of Christmas. So it should be much higher than it was in the previous quarter. So last quarter in Q3, they had 29 billion in revenues, and then they had 18 billion in expenses. So their total profit was about $9.1 billion, right? So that was Q3. Now in Q4, the expectations are a little higher. But what's going to be different this year is Facebook's actually going to change the way that they report to kind of like make themselves look a little bit better, if you want, in a sense of they're going to try to split the revenues and the costs of the metaverse platform versus their family of apps, which is Facebook, Instagram, and their other apps, right? So that's going to make the apps look better than they were before. Apparently, Spotify crashed. So, the fact that they're going to be reporting the numbers differently, we don't exactly know how that's going to have an impact on the perception that investors are going to have and the analysts are going to have. So I'm very, very curious how that's going to play out. And those are some of the things that I'm going to be looking for. Now, you guys actually answered my poll once again, so thank you if you did. I just wanted to see, it seems like most people, 55%, think that they're going to beat on revenue and on earnings. And then there's 31% that think that they're going to either just beat on revenue or on earnings, right? So they're going to miss one of them. So, maybe I should have maybe I should have brought those options together, because these two and this one is pretty much the same. So after hours so far, there's no big difference in the price. We have to keep refreshing. Usually what you'll see is it takes about 10, 15 minutes sometimes for them to publish the earnings. And one way to do it, either you can watch TV, right? They're going to get it fairly quickly from the Bloomberg terminal, or all of a sudden you'll see the price is going to jump or crash very quickly. Someone says Facebook is down 10%, so maybe they actually released the numbers already. Oh, wow. Yeah, that's not good. Down 16.91% already. So the numbers must not be that good, or most likely the guidance. So I don't have the numbers yet. We'll have to wait a couple of minutes. But yeah, we can expect some pain, apparently. Are we going to get the same thing as PayPal yesterday, which was a complete disaster? I'm extremely, extremely upset about PayPal and the way that this is playing out. Because, that's the thing, is that PayPal was at a 43 price to earnings ratio. It was basically classified as a growth company, right? Well, if all of a sudden their earnings don't grow, that means that kind of multiple is too high for the company, right? If the earnings are flat, well, why would it be more expensive than a Facebook or one of the other growth stocks that are in the low 20s? So that's why I'm very, very disappointed with PayPal, and it got really, really punished today. Now, apparently, same thing seems to be happening with Facebook. There's a lot of people selling already on the news. So Facebook, I started to buy in the 250s early last year. And then we had a big run up to 375 or somewhere around there. And since then, it kind of went down. And I kind of had a feeling that we might see a retracement, right, to the 250 to 300 level. It seems like it's actually going to be happening now. Jan says Facebook is going to destroy all other stocks. Well, if they have weak guidance like PayPal, yeah, we're in for a pretty rough time, honestly. You're correct. That's the big thing, is that right now, even PayPal yesterday, is if the market is green, well, it's going to kind of support. But my big fear is, what happens if next week the CPI comes in hot and we have the same fears that we did a couple of weeks ago when everyone was panic selling? PayPal at 131 or whatever it's at now, it's not going to hold. It's going to go down to 100 or something. It's going to be absolutely terrible. So that's my big fear right now. Apple iOS changes negatively impacted Facebook revenue, but we've known that for a couple of quarters. It's the same thing that they said in the third quarter. So that should have been expected already. They said it was going to take a while for them to rebuild the tools so that advertisers could really target the customers that they want. And a lot of people had mentioned that the budgets for the advertisement companies would be down 20% in 2022 for social platforms like Facebook and Instagram. At least that's the numbers that I saw. So I'm not surprised by that. Facebook going bankrupt. I want to see the numbers. That seems a little alarmist. Remember, they generated $9 billion in profits last quarter. But yeah, the sell-off after hours so far is pretty intense. Like now, see, this is what's so frustrating. Like I'm exactly like you guys, right? I bought this stock at 250. Then I bought a little bit more, on the way to 300. So I went from a really nice gain on the company to now I'm actually losing. And that's just happened with a lot of the stocks over the past 2 months. So it has been a very, very rough time. Like that's why timing the market is really tough. Like on a 5-year basis, we'll probably be okay, but in the short term, it really, really hurts. So anyone else has some information on like what has been reported? I didn't pull up CNBC or anything. I don't know how the copyright works for that. Like I know Meet Kevin actually puts it in the background, but I'm not sure how that works out. There it is. I kept refreshing it and I probably missed it. All right, so let me remove this for a second and let's start looking. So 33.6 billion was the total revenue, which is a little lower than what right here, a little higher than what the forecast was. The EPS is lower. So they missed on the EPS at 322 versus what was asked, which was 385. Wait, that has to be GAAP versus non-GAAP. Okay, this is third quarter. Sorry about that. Let's go with this one. So 367, and that's lower than what they wanted at 385. So that's not good. Now, so the active users is up a little bit. Okay, so this is what we want to see. So their apps, Facebook and Instagram, the views have actually gone up 13%. And the price per ad is up 6%. So for the full year, up 10%. So they're still making a little bit of progress, but as we can see, like they're really reaching a plateau when it comes to Facebook and Instagram. So that's why the company is really looking for other ways to grow now. So they actually repurchased 19.18 billion, and so in the past quarter of shares. So the company now is using their cash to actually do buybacks. They have 48 billion as of December 31st. And so let's see. So their net income, which is basically their profit, is 10.2 billion. All right, so the company is still profitable. I don't know if they're actually going to go bankrupt, but they're not really smashing the numbers, right? We could expect that the company was going to do a little bit better than that. Now, this is where it's different from before, right? They are changing it where you're going to have the family of apps and the reality labs, which is the Oculus and, the metaverse plays. So for the family of apps, their revenues are 32.7 billion. And then for the Oculus, it's 877 million. And that is not very, very much higher than it was in the previous quarter. And so September 30th, actually, look, the gains are actually not too bad with the VR. They actually went up, 50% on the VR. So that's making some progress. I saw some reports that the sales were pretty good around Christmas for the Oculus. I'm still looking to actually buy one. So the actual profits from the family of apps is very, very good, almost $16 billion. But it's pulled down because of the VR, right, which is pretty big money losers for them, down 3.3 billion. So that's basically what we were looking for, right? The company is more in a consolidation phase right now. The growth is going to be slowing down until they can actually make progress with their VR segment of the company. So let's see what they expect for the outlook. So they expect 27 to 29 billion in the first quarter, which would be 3 to 11% year over year growth. That's very low for Facebook. People didn't expect them to disappoint. Yeah, I mean, like, I'll talk about what my expectations were in a second. We expect our year over year growth in the first quarter to be impacted by headwinds to both impressions and price growth. So this is a little bit different from what we heard from Google yesterday. But remember, there's a lot of YouTubers that have been complaining about the ad rates really, really being down since Christmas. I mean, I feel it too, right? Well, if advertisers aren't spending as much, then that's going to decimate a company like like Facebook, rather, that is entirely like digital based and based on advertisements. That is one of the reasons why I personally wish that they switched, for example, the marketplace segment of the business from advertising to more like eBay style, where they actually collect fees. Not only, in my opinion, would it improve the customer experience, but it would diversify their revenue sources a little bit, in my opinion. Right now, they are almost entirely depending on advertisement, right? Even for the marketplace, I feel like that's going to be hurting them. So on the impression side, we expect continued headwinds, increased competition for people's time, and a shift of engagement within our apps towards video surfaces like Reels, which monetize at a lower rate than feed and stories. Right, that's one of the things. Right, now Shorts and TikTok and things like those. Like if I make not TikToks, sorry. If I make how do they call it on YouTube, like Shorts or something like that, I don't even get paid for that. Basically, like they have a pool of money, and sorry, they have a pool of money, and they kind of like randomly draw who's going to get some cut of the money. So that's why I don't personally do it. On the pricing side, we expect growth to be negatively impacted by a few factors. So there's the Apple iOS changes, but we already knew that, right? This is going to last for at least another year or two. They've been trying to rework their tools to allow advertisers to really target, once again, the consumers like they did before. But we know that's going to be a while. They already said that in the third quarter. A period of strong demand in the prior year, and we're hearing from advertisers that macroeconomics challenges like cost inflation and supply chain disruptions are impacting advertiser budgets. All right, so basically they are following exactly the same like trajectory and narrative as PayPal did, and that means we're screwed. Finally, based on current exchange rates, we expect foreign currency to be a headwind. All right, so that we don't care as much. So expenses, we don't mind as much. And let's see if they actually released the. How do you call it? The presentation yet? So we see all that with graphics. No, I don't think that they did yet. So if you look, like probably later, they'll post the slides after the presentation, and you'll see all this information with graphics, right? So you can see more easily like Q3 2021 versus, Q4 2021 versus Q4 2022. And that's basically what we were thinking, right? Earlier this year, is that the comparisons between 21 and 20 were always going to be very, very strong. The comparison between 2022 and 2021 were always going to be very, very difficult, because of the fact that, if you guys remember, like back in January and February last year, everyone was super hyped about finance and like YouTube advertising. Everyone was still at home because of the pandemic, right? So like people were spending so much time and money on it, while now comparing to last year, that's why, of course, the comparisons are going to be like much more difficult. So the fact that the company is still very, very profitable, I find that very, very beneficial. Like when you're holding Facebook, and that's why I'm not going to be panicking with this one. PayPal, I'm kind of panic mode with that company, right? Because they really don't have anything that's going to be that fruitful anytime soon. But Facebook being so profitable, sorry, I can't talk. Being so profitable already, you're basically being paid to wait. Right now, generating, what was it, 12.5 billion, right? They're going to continue to do those share buybacks. If we see, what was it again? Yesterday I made the mistake. I was looking for buyback, but usually they call it repurchase. Right, so this is what they did this time. So repurchase 19.18 billion, right? So that's probably what they're going to be doing in 2022, is that while the market's not doing great, they're just going to spend their money buying back shares, and that really helps us as shareholders. And that's why currently I'm mostly looking for companies that are profitable. Like a lot of my spec plays, I either sold because I expect the year is going to be tough, or I'm keeping them, but only if I don't feel like they're going to be hurting me too much. All right, so since they don't have the actual presentation out, we can't really watch that yet. So until, oh, they actually published it. Well, good coincidence. So let's go over this really quickly if you guys want. Right, you'll see that like the company continues to make progress. It's just that the progress is slower and it's not going to be exciting for the analysts anymore. So we might see some downgrades tomorrow. I'm looking forward to seeing that. If it's as bad as PayPal, I hope not. So Q4 2020, wait, where's 2022? Oh yeah, okay, so Q4 2020 was 28 billion and the total revenue, and now it jumped to 33 billion. So the company is actually progressing, right, year over year. So I don't see what's wrong with that. It's just that the growth is actually starting to slow. So segment results, 27 billion. See, they're actually, so that was in Q4 20, right? So Q4 2021, 32 billion, right? So they generated 5 billion more than last year. So once again, kind of like PayPal, it's not really about the fourth quarter results that people are worried about. It's about the guidance for 2022, right? The guidance is going to be lower than before. So if you look, oh, okay, so the earnings per share is actually down slightly from last year. See, well, this is family, but daily active people is really starting to plateau, right? You're not seeing that big growth that they had before. Daily active users, 1.9. See, that's actually lower than the previous quarter. And it's basically flat for the entire 2021. So I don't know what you guys think, but feel like that is a little bit disappointing and a little bit worrisome. We are really going to be needing the metaverse to like push us further with Facebook. All right, so nothing really stands out here. Again, it's a guidance for 2022. They expect that it's going to be fairly bad, right? As we were saying, the comparisons to 2021, where everyone was super hyped. If you guys remember, like YouTube in 2021, in January, February, like everyone was getting massive views and the advertisement dollar was really, really strong. Now it's pulled back tremendously. So they expect 2022 is going to be pretty bad. We're going to be paid to wait, and then eventually when the metaverse starts to actually come online, we'll be able to maybe make some progress. But look at how, wow, the stock's getting punished way more than expected. So down to 250 now, 22% after hours. Ouch. All right, so we have time for some questions. Down 18% after hours, that's extreme. Yes, but remember, that's the thing, is that the market is always looking forward, not backward. Now, the big difference with Facebook compared to PayPal, the reason why, yeah, this is not great, but I'm not panicking whatsoever, is because Facebook is low 20s PE ratio. PayPal was at 43, and before that, remember, it was at $300, right? So with Facebook that was at low 20s, well, the company can be almost flat, and it's not going to be like that big of a problem, in the sense the company is already at a good valuation. Meanwhile, PayPal yesterday, I mean, it was valued as a growth stock. Like when the company has a 43p ratio, you need the earnings to actually be very, very solid. And so that is the big difference between the two companies. Currently, the stock is getting absolutely crushed, and I'm upset about it, but I feel very, very comfortable holding Facebook, right? Compared to the other one yesterday. So let's see. Other question. Is the metaverse still being built? Yes, absolutely. They're probably going to spend a lot of time talking about it in the call. Can't wait to see that. I mean, that is their one big focus right now. I mean, you see how much money that they're actually, let's see where it was. Like, I mean, they are spending so much money to do it that it's actually causing them some losses. See, so they have 877 million in revenues for Reality Labs, and it's costing them 3.3 billion this quarter. So the company has said many times that they're going to be investing about like 10 billion per year to build the metaverse, and the goal is for them to have like the ecosystem the same way that Apple has their app store and Android as their app store. So right now, if you go to Oculus and you try to like buy something, buy apps, well, Facebook is going to get a cut. Plus, they're trying to buy different apps, right? Like when Beat Saber, anyone that buys it, well, I think it's $29.99. Well, now that goes to Facebook, right? It's just that right now the revenues are way lower than their expenses as they try to build it. Will we hit minus $100? Maybe. I feel like this one is a little bit over sold, but we'll see. You think so? So someone says music nonstop 987 says, or something else. Facebook P low, but it's a don't touch now. I don't know. Why is that? Again, like Facebook anywhere on at 20. I mean, like, what more can you want for this company? You're being paid to wait. I'm not as panicky about this one. Yeah, bad earnings and potentially will get worse. Looks like PayPal from yesterday. I totally agree, but as I was explaining, I mean, I see a big difference between the company because one was priced as a growth stock, while the other one is always a little bit undervalued because like people are worried about the legislation and stuff. Oh yeah, I don't know if you guys saw, but they're still trying to really investigate Facebook all the time. Like now, they're even investigating them for their acquisitions in the for the VR, right? So anytime that they try to buy a company, they're going to have people looking at it. So P's low, doesn't matter. Wall Street wants growth. Yeah, but I mean, like in times like these, when the market's not doing that well, usually value stocks, which I know like Facebook's not considered a value stock, but companies like these that are profitable, that's what you can count on, right? They're going to be buying back shares. So the float's going to get lower, and that should help actually support the stock. Like not necessarily in the short term as much, but the smaller the float gets, the better for you when eventually there is a rebound. And with Facebook, we clearly know what the trajectory is. PayPal is all over the place. Like they're throwing ideas left and right. Oh, we're going to try to do crypto. We're going to try to do this. We're going to try to do that. They don't really know what they're doing right now. They're looking for something. Meanwhile, Facebook has like one focus. Like Mark Zuckerberg actually has devoted the entire company to the metaverse. So if we think that the metaverse is not going to work, then, it's bad. But if you have faith in the metaverse, then it's not that big of a deal in the short term. Finally, I can start my meta position. I agree. 2 years out, it's a good value stock. I agree also. Let's see. I wonder what will come after the metaverse. I don't know, but that's really far out. I mean, they're already looking at the metaverse to be a 10 years play. So I'm not looking that far out. I don't know where it goes from there. Like, I am concerned about the FTC always investigating them and trying to break them up. I don't think they're going to succeed, because like when they acquired Instagram, like the FTC actually gave their approval for that, right? So retroactively 10 years later trying to break up the company, it doesn't really make sense to me. But when it comes to acquiring new companies so that they can keep being in the lead for the metaverse, that's a different story. FB growth rate has slowed down much quicker than people were expecting. Yes, I agree with that. Like that, but again, that's the thing, is that, I mean, we even talked about this. I made videos about Facebook before. Like, they have the entire market when it comes to Facebook and Instagram, right? So almost everyone's on it already. There's just a limit to how many more users they can get. So like what they're trying to do now is try to optimize it, and maybe we can get a little bit more engagement here or there, but they've really saturated that market. So it's really all about the metaverse, which is, as we said, like a 5 to 10 years play. So Facebook is undervalued. Its intrinsic value should be close to 350. I mostly agree. Let's do something. All right. So I don't know, what kind of P ratio do you guys think it's worth? Like, someone type it in the chat box. I just want to see what you guys think. Like, what should a P ratio be for Facebook right now? Like, considering the company, like, it's not growing as quick as it was before, but it's still a very, very strong company and very profitable. Anyone has a guess? I don't see what their... So they talk about their revenue for 2022 being 29 billion, but they don't really mention like how that translates to an EPS. So let's see if there was an estimate on Yahoo Finance. So I see 2022 between... I see 15 seems a little bit low. I mean, to me, 20 to 25 seems really, really good for Facebook. Let's see if there's an estimate. I mean, maybe the estimates are actually wrong now, but let's see. Okay, so for next year, they expected... No, this is... Okay, so they expected about 14.19. All right, so let's see if that actually applies, right? So if you do 14.19 times... let's say 2020, let's say 22p, and a lot of you have said 22. So that would be about like $312 would be a fair value, right? So, I mean, the stock being at 248 right now, remember, I'm not a financial advisor. I cannot tell you guys whether to buy or sell, right? It's just, I can't do it. But I feel like at 250 for the company, it's very, very good price right now. And I'll be looking to buy. So that's personally what I was waiting for. So, I mean, we're at 33 minutes now. I'll start to wrap up. Personally, what I've been looking for the company is I start to build my position at 250, and then I actually increase my cost basis. And I never got to the target that I wanted, right? Because of the fact that the shares actually went up to like 375. Let me remove this for a second. Sorry, guys, I'm still fairly new at this. All right, so let's switch to this. So I actually never got to the target that I was looking for, which would be to be one of my biggest positions. Right now, I only have 60 shares, which means about $20,000-ish. Right? So I wanted to make it bigger than that. But after it went up to 370, I was like, it's too late, right? So now what I'm doing is instead of buying one big block of shares like I used to do, and then it's really hard to time it, right? Especially in this market, which is super, super sketchy, as you guys know. I'm buying like multiple smaller blocks. Facebook being a more expensive stock, I'm actually buying like 10, 20 shares at a time, which I know it sounds so ridiculous, but that's like $3,000 to $6,000 at a time. And now being 250, like that's kind of what I was waiting for. I was waiting for the stock to pull back, hopefully under 300. At 250, I'm actually going to probably buy more now, and it's going to lower my cost basis. But yeah, it seems like 2022 is going to be a consolidation year for Facebook. I don't know if they're going to be able to rebound like Microsoft did, or if we're going to have a really, really poor day like with PayPal, right? But again, like just to conclude, I like Facebook's situation a lot better than PayPal. Like Facebook has a very clear direction to where they're going, while PayPal is a little bit more scattered. And the CEO pretty much lost all credibility, because if you guys remember, back in November, he was on Kramer, right? And he was talking about them getting record numbers and all of that, and that didn't materialize. Not only did they miss slightly on Q4, but their guidance for 2022 are really low. So we'll see what Mark Zuckerberg, if he's on the call, what he has to say. But I like Facebook in this situation a lot more, especially at 250. So, hey guys, thank you very much for showing up. I really appreciate it. If you guys want to leave me feedback, that would be great. I think that it's a lot better than yesterday. And I'll see you guys in the next video. Thank you for showing up.